Isn't it fascinating that over the last 15 years, nearly 90% of professional fund managers fail to beat the S&P 500? Yet many individual investors make the same costly mistakes. No waiting, as always, I'm giving it to you upfront. The three biggest investing mistakes that I see are: first, absence of structure; second, owning too many stocks; third, selling winning stocks too soon and holding losing stocks for too long. First mistake, no structure. Investors buy whatever looks interesting or hyped: an ETF someone recommended, a stock they saw on social media, another company because it's just trendy. The problem isn't the investment themselves most of the time. The problem is the absence of structure. When there is no structure, there is no purpose, there is no vision. Years ago, I studied my workplace pension fund and paid quite close attention to the allocations. That portfolio was through some volatile times: credit crisis, lost decade, political turmoil, lockdown, you name it. You know how the fund performed like clockwork anytime? Allocations with purpose. Some investments provided stability, some provided growth, some provided income. Pension funds have a very strict structure. That observation helped me to shape my own portfolio. I built it myself, although mine is a bit more growth-oriented. The portfolio I built has only 4 layers. I simplified it: index funds plus gold, core growth stocks, income investments, moonshots. Solid structure makes future planning and rebalancing much easier. Instead of making emotional decisions, you know exactly which layer needs attention as your life goals evolve or change. Second mistake, owning too many stocks. Many investors think that diversification means owning as many stocks as possible. I used to think that too. Imagine now opening your portfolio of 25 stocks and seeing half of them green, half of them red. Even strong-willed investors can fall into a constant cycle of rebalancing. That process often leads to losses. The other challenge is that many even high-quality positions become too small to make a meaningful impact. The gains get spread too wide. Personally, I'd rather understand 2 to 5 businesses deeply than 20 businesses superficially. Third mistake, selling winning stocks too soon and holding losing stocks for too long. This is why long-term mindset is a double-edged sword that requires skills. You know that holding same stock but having different mindset and different time horizons can make one person wealthy and bankrupt the other. Let's say you and your friend bought Apple stock at the same time in 2020. You stayed disciplined and long-term oriented. You held the stock through thick and thin until now and gained 1,300%. Your friend sold after a year of gains and bought some hype stock that went nowhere. He then realized he made a mistake and piled back into Apple in 2025, only to experience another decline. He could not take it and sold again, only to see another run-up in 2026, but again from the sidelines. Same stock held once, completely different results. This mistake can be the most expensive of all. At the same time, many investors do the exact opposite with losing positions. They hold losers hoping they will recover. And they sell winners because they are afraid of giving back gains. Key indicator for me: if a company's fundamentals remain strong and improve and my investment thesis hasn't changed, my mindset, long-term hold. And when fundamentals are shaky and it doesn't improve, it's a red flag that needs my attention. Some of the biggest returns in investing come from patience. At the same time, some of the biggest losses come from overholding. Investing isn't only about gains, it's about avoiding expensive mistakes. Use your structure to your advantage, and your structure can be completely different from mine. Depending on life circumstances, your age, your risk tolerance. I'm just giving you ideas to build on. Keep your portfolio focused on your goals. Let your winners work and cut the losing stocks immediately. If you would like to see my portfolio, check out the portfolio structure in my community post section in this channel. In a future video, I'll share how I qualify the stock using a simple method that anybody can use. Let's touch base at the next one.